People talk about a license to print money, but what if the paper itself was the machine? That's when it happens. The paper starts to print, not because of a government, but because of a promise.
How do you create paper that prints money?
Did you know you can buy a mortgage? Most people think real estate wealth comes from owning property. In reality, a lot of it comes from owning paper. Here's what that means. When I go out and buy a manufactured home, I rehab it and I sell it to Jane. I don't just sell her a home, I sell her payments. Jane buys the home on terms. She agrees to pay a set amount every month for a set number of years.
That agreement
is called
a promissory note.
It is a legal promise to pay.
Secured by the home
That note
itself.
is not imaginary. It is secured by the home itself. I place a lien on the title, which means I don't own the home, but I have a legal claim to what is owed. The home becomes collateral. Jane gets affordable home ownership. I get a secured stream of payments. That's how paper is created. That paper is an asset. It produces income every month. It earns interest. It has value because it's backed by a real home and a real borrower. It is very similar to how a bank makes money, except instead of the bank holding the loan, I do. Why does this exist? Because financing manufactured homes is difficult. There are only a handful of lenders in the entire country that do it consistently. Most good buyers fall just outside traditional lending guidelines, even though they can afford the payment, so seller financing fills the gap. We underwrite the buyer, we follow Dodd-Frank rules, we document everything, the buyer gets a fair payment, and the home stays affordable. With a performing note being created, if that note can be held for cash flow, or it could be sold to an investor who wants income backed by collateral. Either way, a paper asset is created that prints money over time. The rate, the term, and the payment are all agreed in writing and governed by law. That's what makes it real. Hardship in the housing market creates demand for this. When banks say no, people still need homes. And when homes are financed responsibly, everybody wins. The family gets stability, the investor gets income, and the asset does the work. This is what I do. I buy homes, I seller finance them, I underwrite the borrower, and I create secured paper that produces above average returns. That's how money is made on money, not by guessing, but by structuring.